this is a buy on the FTSE here, a buy on the pound. This is obviously going to be a buy on the pound. This is obviously going to be a sell on the pound. And this is going to be a buy on the pound. And obviously the contra to that is going to be a sell on the FTSE. So in other words, this is going to be a sell on the FTSE here, a sell on the FTSE here, a buy on the FTSE here, and a sell on the FTSE, because you can see that these are areas where the pension fund is going to be so stretched that they're going to want to do some business. So that gives you an idea of looking into those areas for opportunities where the pension fund may do some business. Now, this is only a one market relationship, and as a result, on a one market relationship, it's looking into those individual swings to try and identify what that relationship is. And you can see that the relationship can be very short term as well. We can do it longer term. Here's an example here. You can see that the max relationship was starting to build here. Now, obviously, that relationship stays in place as the pound is falling. So you'd be starting to buy the pound here, and you'd be starting to sell the FTSE here. So you're starting to buy the pound on these two candles here, and you're starting to sell the FTSE on the way up. You can see what happened. The FTSE dropped, the pound rallied. So if I took that pound trade, you can see the pound at least broke even, and the sales on the FTSE that we would have had during that process would have ultimately have made a profit. Then that spread trade is profitable. That spread trade is profitable at that stage. So again, it's just a case of looking. Here's a classic example of a spread trade setting up here because we got a massive spike on the non-farm payrolls. Here it is here. So obviously you can see what that is. You can see quite clearly that there's going to be a spread trade here because the algorithms are going to go nuts with this one. So you're going to start buying sterling, aren't you? You're going to buy the pound dollar here, and you are going to absolutely annihilate the FTSE here. So you're going to annihilate the FTSE on that spread trade right there. See it? And obviously what happens is the pound goes straight up, the FTSE starts to drop. Make a double alpha profit again, isn't it? You're making a double alpha profit on that spread trade right there. So you're long pounds, and even if you held on to that spread trade, the pound is now massively in profit. And obviously your FTSE short trade is still in profit there as well. It's a double alpha trade. So you can see that these double alpha trades are setting up some cracking spreadable opportunities. I don't know if we've seen any more since then. No, we haven't got any more spread since then, but you can see that these spreads are instant profits, almost instant profits, because they are actual arbitrage-esque. They are pure statistical arbitrage. They're not directional bets. They are actual statistical arbitrage. So we've actually taken the whole max program right through to the institutional quality of statistical arbitrage when the pension funds are going to start putting in their adjustments. So I'm using my own inside knowledge of where the pension funds do start doing adjustments to make sure that the threshold that we're using on something like the pound against the FTSE is at a level where we know that the algorithms are going to make those adjustments, and therefore we can almost guarantee an arbitrage profit on those trades. That could be quite exciting, couldn't it, for anybody that wants to trade the pound against the FTSE? That could be very exciting to make an arbitrage-esque profit. So you should be winning about 99% of those trades. Yeah, these are as close to arbitrage as we can get it, guys. So when you're looking at those types of things, there, the money can pour into those trades. It's not about it's not for the faint-hearted. You're going to go heavy. You're going to go deep into those trades because they will make money. They will make money. Jack, that's going to be a project that I'm going to be working on over the weekend when I'm going to start looking at the index arbitrage as well, because the big breakthrough on the Max program, and I promised the guys this morning I wouldn't just be talking about Max today, but the big breakthrough we had on the Max program was that I asked the boys that, I just told them that the whole process is just too slow, waiting for every Thursday for us to all get together again and then go forward. At this stage in the process, I need to take over. I need to be doing stuff myself with this process. And what I need to now do is I need to get them to give me enough user device settings or user-defined settings so that I can play with the thing instead of just waiting for Thursday to get moving with it. So it gives me the opportunity now to do more work on it myself. So it's basically now confirmed you know, the boys did a lot of work last night on making it more user defined so that I can actually now play about with the settings and the different values that I need to use to try and identify all the different things. I now have the two tool sets in the background that allows me to do that, which means I've now got the opportunity to explore everything that I need to come up with a final set of characteristics. I've now got everything I need. So hopefully that gives me a non-stop week. It just means that we just have to consign sleeping to the bin for a week or so. And, you know, we just need to press on now. So I've now got the ability myself to now do this from the second I'm at the screens to the second I finish at the screens. So that's good news. And you know, that means we can actually really start to think about linking it up to a live account next week. And then obviously starting to generate actual automated results so that you can see what it did do, not just on a manual scale, but on an auto scale as well. And so we are in the final stretches. We're in the final stretches, guys. But I don't know which one's going to be first. Whichever one I'm happy with, you know, I've got to be happy that you know, some of these might have to go back to the drawing board. But you know, we're going to obviously try and focus on the ones that are cleanest and easiest and have the highest profitability, of course, and we'll get those out first. We're not waiting to get them all before we launch it. We're going to launch them as they come up, you know. So as we're happy with one, and we're delighted with the performance in real time, and we're delighted with the fills, and we're delighted with the slippage and all those kind of questions, and then we'll launch it. It's as simple as that. We won't wait for them all to be available and then launch them. We'll just launch them as we go, basically, and whoever's in that market at the time, whoever obviously is you know, in the market, then they've got first dibs at the indicator itself, and we'll leave the indicator running for a while and then allow people to see it, and if they like it, then we're good. If they don't like it, we'll go back to the drawing board and we'll do it again, guys. We'll do it again. But obviously, me personally, I love the spread one because it's very, 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 very much like what we use on the statistical arbitrage trades, on the statistical arbitrage desk. Because guess what happens? You see that pound against the pound against the FTSE? It's also going to give us opportunities to do bonds against the bonds. We're going to be able to do the fives against the tens. We're going to be able to do the fives against the ultras. We're going to be able to do the tens against the ultras. We're going to be able to do the tens against the bunds. We're going to be able to do the ultras against the bunds. We're going to be able to do the ultras against gilts. We're going to be able to do all the bonds against all the bonds. We're going to be able to do the bonds against oil. We're going to be able to do bonds against equities for their hedging. We're going to be able to automate all of those processes so that we can actually see exactly where the trades are starting to set up. So then manually you can go in and do whatever bits of business you want, basically. So it really does open the door to a whole world of trade. I mean, literally a whole world of trade. And we didn't finish until quite late last night. It was you know, probably about 2 or 3 o'clock in the morning by the time I got finished. And then back at the desk at 6 to get started on my own job. So it was quite a long shift. It was quite a long shift, guys. So anyway, welcome in. I hope you're all good. I hope you're all good, guys. So 199.28's got down to 198. Evens, nearly the full $2,000, by the way, guys. Nearly the full $2,000 before the bounce off the 198s. Nessie asked a question this morning, which we attempted to answer. I don't know if I was successful in answering the question, but I said to Nessie that we'll do. Because it's quite a long question, or rather it's a long answer to Nessie's question. I said I would do it more over the weekend and I would come back to her, so we'll cover that as well. Anyway, welcome in, guys. I'm going to grab a little bit of lunch. I'm running behind the curve a little bit here just now, so I'm going to have to catch up. But I'm going to grab a little bit of lunch and we'll get back and we'll get started into the cash open.